Well, yesterday's official cash rate cut isn't exactly benefiting everyone. SBS Finance editor Ricardo Goncalves has the details. Ricardo, it seems the banks are being a little bit greedy.
Well, Anton, the big four banks have now announced their new rates, but most of them won't come into play until next week, confirming they're quicker to pass on rate hikes than rate cuts. Finder.com.au says it took Australia's big four banks an average of 6 days to increase standard variable rates during the rate hike phase in 2009 and 10. But during the rate cutting cycle, which began in November 2011, it took 11 days to pass on those cuts. And here's why. For every day the big four banks delay a rate cut, they collectively earn about $4 million. And it's not just mortgage rates being held onto, but credit cards also. The RBA has cut interest rates by 2.75 percentage points since November 2011, but the average credit card rate has remained at around 17%, pocketing the banks roughly $3 billion. Why? Because we're not spending enough on our credit cards.
The amount of debt accruing interest has dropped, so that really impacts on the amount of money that providers are making.
Now, low interest rates are also not good for savers or those 2 million Australians who either completely or partially fund their own retirements. CommBank, though, took the unusual step of lifting some of its deposit rates yesterday, so remember to talk to your bank and negotiate a better deal. In corporate news today, Woolworths is in the process of shedding 800 jobs. The supermarket retailer has already cut about 400 support roles, with a similar number to go in the future. It follows a 2.1% fall in quarterly sales to $15 billion. The company admitted today it needed to keep the customer in mind. And as a result, Woolworths shares slumped 5%. The other retailers incidentally fell as ABS retail sales data missed expectations by rising only 0.3% in March. The banks were smashed today, with the big four entering correction territory, meaning they're down about 10% since their recent peaks. CommBank gave up nearly 6% today after it disappointed with a quarterly $2.2 billion profit. Now, CBA and Woolies were responsible for 1/3 of all the day's losses, and those losses were massive. $40 billion wiped off our share market. Was the worst day in 2 years. Investors are now worried about company earnings. Shares on Wall Street took a tumble after a surprisingly wide US trade deficit for March. The Australian dollar is still trading close to 80 US cents and is firmer across most of the other global currencies. And on the commodity markets, both gold and oil are higher. Now, investors might need a bit of a drink after today's shocking share market performance, but the chances are they're probably not drinking beer. The ABS said today the brew's market share fell from 75% in 1965 to 41% today. However, wine increased from 12% to 38%. All up, though, we're drinking less booze than any time in the previous 50 years. I'm a bit more of a Campari drinker. Anton and Janice.
Thanks for that, Ricardo.